Meme stock mania is back. After rising to dizzying heights in the middle of the pandemic, everyone thought that the meme mania was over now that things have returned back to normal. But that's not the case. The recent wild price moves in stocks like Bed Bath & Beyond, AMC, GameStop just goes to show that the meme stock craze is probably back after a long hiatus, and we're here to explain what are meme stocks and what's driving this frenzy that we're seeing. Welcome to Tech at Work. Now, meme stocks are US-based stocks where the share price rises instantly because everyone on the internet is talking about them, hyping them up, unlike normal stocks. These stocks have a rabid following on the internet, and through the word-of-mouth publicity, coordinated trading action seems to be taking place online, which pushes the stock with big moves. We're talking about a 30–50% up move or down move in a single trading session. Now, normal stocks typically move up or down, largely based on fundamental news. But meme stocks like Bed Bath & Beyond, AMC Corporation, GameStop Corp have often gone up or down 30–50% overnight, and not necessarily because of great news surrounding it or super fundamentals. In fact, for the three above stocks, Wall Street had written their obituary. GameStop was a traditional brick-and-mortar video game store. You would probably say a relatively outdated, obsolete business model, especially post the pandemic when the world took to online gaming, and now going ahead, gaming will probably be in the metaverse. Yet, the GameStop share price was up 700% last year. AMC Entertainment was a theatre company, and with the rise of streaming media services, it was all set to pose a challenge for AMC. Yet, the AMC shares were up 1,200% in 2021. Bed Bath & Beyond ousted its CEO following less than 3 years on the job after the company reported lousy earnings in June. But yet, for Bed Bath & Beyond, there are also concerns on how retailers can turn things around, especially due to the inflationary environment that we're currently in. So if the fundamentals were poor of all these three companies, why did they give such crazy returns, and where did it all start? It all started in January of 2021. A Reddit forum called Wall Street Bets started talking about how a particular company's stock was being short sold by some of the rich investors. Since the rich investors were betting for the share price to fall, Reddit forum Wall Street Bets began a challenge to prove these rich guys were wrong and get them to suffer losses. That's why hundreds joined in on the Reddit channel, bought these shares and drove the share price higher to make the rich short sellers incur some big losses. Stock trading was also aided by low-cost apps like Robinhood that made trading a lot easier. At that time, meme stock trading was attributed to people being stuck at home, spending their stimulus checks, crusading to topple the big Wall Street firms they thought had rigged the financial system against them. So the playbook of meme stocks was simple. The meme stock focus was on companies with either a small number of shares outstanding, making it easier for the stock price to move, or ailing businesses that traditional investors had bet against. Congregating on social media platforms like Reddit, meme stock traders seek to push out the stock price higher, punishing others that have wagered on the demise of their favored companies and exacting revenge that they see as the establishment. The other question is that meme stock trading was very popular in the middle of the pandemic, at the beginning of the pandemic. But then it went into a long hiatus. Things went quiet on that front. But once again, they made a big comeback in the month of August, and the question is why? One of the analysts explained on the internet what the reason could be for the return of the meme stock mania, and he said, and I quote, "I think it has a lot to do with retail investors seeing the rise in the last month from the lows in June and wanting to be a part of that and having some fear of missing out." Another one said, "The ability of information sharing, the fear of missing out, and the ability to coordinate trading online is underestimated." Well, if that's the case, then it probably implies that meme craze was just not a pandemic period phenomena, but just could be here to stay. Thank you.